Good day, Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Thursday, and we're sitting here on the 4th of May, 2023, just getting on to 5:40 p.m. Central Time. So one more big shoe is going to drop tomorrow, and that's going to be the U.S. jobs report. They're looking for 180,000 jobs and the unemployment rate to stay at 3.6%. Now, today was all about worries about banking. Where it comes from, how it comes about, I don't know. But if you were watching Alliance, if you were watching PacWest, you're watching these stocks just crater. Are they in big trouble? Is there truth to believe? I mean, the Alliance people came out and they're quoting what their deposits are, how they've gone up over the past 3 days. I don't know, the 3 days gets me very excited about anything. But they're talking about things of that nature. And it seems to me that, as one of my viewers, you people, said, the wolves are out. I called it the vultures, but he's right. It's the wolves. The pack is out, and they're looking for the weakness in the market. And if they look hard enough, they seem to uncover things. These stocks didn't go down a few dollars. You know, when you're starting to talk bank stocks dropping 30, 50% in a day, it's scary. And that's what's going on. So it creates a bid in the gold. It creates a minor bid in the dollar. It gave a bid to the bonds in the note market. And you wonder, where am I? Now, the strange thing is, if you saw crude oil this morning, you're looking at $68. What if I told you it got under 64 this morning? It was brief, but it went there. It was like the whole market was cratering in. I wanted to do a special report. I didn't know which market, and I started looking around. I swear to you, I spent a couple of hours today saying, gee, should I do a report on this one? Should I do a report on that? I walked away doing no report. And if you know me, I'm not lazy. I work all the time. I just said, you know, I don't see a setup here where it's worthy of me spending the time for you and saying, do this. Example, you know, I'm bearish the dollar. Did a report. While gasoline has fallen rather dramatically, we caught that surge in the market and then gave some money back, but I was right in the analysis on it. I think I'm right in being long the gold market longer term, but as you're going to see in a minute here, when would I ever tell you to buy a Bollinger Band top? It doesn't exist. Now, the stock market's getting a little reprieve today, okay. But remember, it was down dramatically this morning again and stayed down most of the day. We'll get to that. So here you are on the gold, and this is a heck of a nice gain. You're up for the week 2.88%, $57 higher. You can see how the market has just picked itself up, and it's acting very well there. I hate the pattern, though. I like to have in a bull market when I have higher lows, higher highs. You don't have it. You have a lower low and then a higher high. So this is a vertical price rise that began at 1982, got as high as 2085. It's a $100 rise, and the market every single day, look at that, 5 days in a row, higher highs, and just carried the market on an average of $20 a day. I want to see a break in the market. Why? Well, I can see that you're over the 18-day average, which is over the 100, which is over the 200. We've known that. We can see where the support of the market is. Here's what I don't like. I don't want to buy a market or have you buy a market that's over a Bollinger Band. The words go both ways. I certainly wouldn't do it, and I wouldn't want you to. Get a break in the market, and I'm interested in it, and I'm not looking for a big break. I don't think there's going to be a big break right now. Why? Things are too unsettled. Tonight, they're giving you ideas from the FDIC. I wrote about it in my report already tonight, how they're going to start charging the big banks to replenish the $13 billion that the FDIC has lost. The little banks aren't going to be bothered. Even banks with under $50 billion, you heard the word, not million, $50 billion may not get charged. They're going after the big boys to replenish the money. And when I take a look at momentum in the market, well, the momentum in the market is not overbought. It's in the 60s, but I could never, in good conscience, tell any of my clients, hey, go out and buy a Bollinger Band. You generally get punished for doing that. Now, I am impressed with what's going on in the silver to a degree here. Let me sort of walk you back this just a little bit here. The market got up, hit the 18-day average of closes, sank back, hit it again, and this is what it's starting to do. Is this for real? If it is, it means silver's got another leg coming against the gold market. What's wrong with the silver is, like the gold, it's telling me, hey, Ira, go on, call your clients. Hi, Bob. Hello, Mary. And what are you going to do? You're going to buy the Bollinger Bands with an overbought condition. I hope they both hang up on me, because it is the wrong thing to do. If it goes higher, say la vie. I've missed other trades before, plenty of them. But that is not the setup that I would want to deploy new money into. In the copper, are we going to embed? All right, you can't count tonight because we don't know where today's going to finish. So yesterday, which is Thursday, I know it's today, but it's Thursday's trade. Both numbers were under 20, both under 20 the day before, not the day before. So tomorrow's going to tell me if the market embeds. Typically, markets don't embed. They try to spin away from it and not get that. If they do, well, then I'll be looking up here again at the resistance. But there's resistance in this market. It's not the bull market it was. This is a bull market no more. This is a market at this point in time that is in the bear phase. It's got plenty of resistance from 396 to the 402 level. It is oversold, but if it embeds, I think you have to join in on the party to see where it might carry. The logical spot is the 200-day average in gray, 378 and a quarter, down to wherever the Bollinger Band is. But the bears will take control of the market, and I will probably want to join in. In platinum, you're in a downtrend, but you're already oversold. We can see the move. It all began when you lost the embedded reading right here, and the market gave way. That's why that embedded reading is so important when you lose it. In the palladium market, you're in a downtrend, you're oversold. So I either have markets at the upper end of a Bollinger Band, which I would never tell you to buy, or I've got bear trends where I'm already oversold and I can't tell you to do anything there. This is the dilemma I was having as I was trying to put together to do today. I thought this morning, I even said it in my morning updates, the morning flash, I'm going to do some reports today. And I went looking at them and I'm going, I don't have anything to do. Now, admittedly, I only looked at the futures market. I'll probably tomorrow take a good hard look at the stock markets and find something to do there. But I said to myself, why don't I just wait for the jobs data now, and then I'll do that. And that's where I'm at. In the dollar index, a higher high went up to the Bollinger Band 72 hours ago and right back to the lower Bollinger Band. You don't do that normally. Take a look at this chart. How often do you do that? One time back here. It's not normal. 2 times over here. It is not the norm. Look at all the other patterns in there. No, that gives you an idea when it happens, how the market's flipping on a dime like this, and what's happening is people have no idea of what the trend should be, what it's going to be. It's trendless. It's just whipping back and forth according to the news of the day, and that is dangerous. Now, there's something I want to show you, a couple of things before you leave me. First, if you want to join me in the morning, there's the Join Me button. But now take a look at this, because it's not something I've ever shown you before. When I say to you, hey, if you want to get my free offers, you go into our website at the free offers. This is that page. And you choose from anything that you want. You just give it a click. It's under iraepstein.com. You choose as many as you want, whatever you want from there. It creates to us an email, tells us with your name and everything what to get out to you, and we immediately process it. It can't be any easier than that. Look at how many different things we have, the different courses that I have in terms of the free ones. The Arun indicator, the pivot points are here. You've got all the different other parts of the elements. If you want to get, for example, more Research Center, some of their stuff, we work with them, we do it. The different vehicles, the trading books that we have, they're through here. Our trading kit is in there. I can go on and on. All right. My free offer of, if you want to try 2 weeks of my advisory service, if you want to try the Linn stuff, it's all in one spot. So all you need to do to get this is pretty simple, folks. You go to our website, iraepstein.com. You can move your cursor also to the top here. It'll take you. Just give it a click. You'll be in here. Choose what you want, and we'll get it right to you. I'm Ira Epstein. I'll see you first thing in the morning. Scratching my head. What do? You take care.